Hi, my name is Peter Garnry and I'm the equity strategist at Saxo Bank, and we are now midway through the press conference at the ECB. And just to wrap up what happened, if we take a step back and look what happened in the 6 or 7 trading days leading up to the press conference, you saw the euro dollar moving down from the highs of 133 all the way down to around 130 and a half just today, early this morning, indicating that some traders in the market were looking for some downside risk and a negative surprise. We didn't get that. It was an unchanged decision on interest rates, and on the press conference Mario Draghi said that the decision was unanimous, and also that the economy is improving, and that also made the DAX index to spike, in index futures on the S&P 500 in pre-market were also up. So he was confirming what we essentially already knew from the data, that we are seeing stabilisation in the eurozone. Exports are growing, so that's give us signs that the competitiveness of the eurozone is increasing. And the ECB now expects from their indicators that loan dynamics will improve over the course of 2013. So as we move along, if we can get through the first half of 2013 with no major bumps on the road, we should see some kind of recovery to positive growth in GDP in the second half of 2013. And you can see here the euro dollar is actually again making new intraday highs. It's now very close to 131.80, so a lot of stops have been taken out, and it seems like also, if we now we can't see it on the chart here, but the DAX seems to have been stabilizing at the high level. So this is a confirmation of the positive news coming out of the press conference. So overall positive from the press conference, and although the initial jobless claims and continuing claims from the US that came minutes before the press conference were also positive on the US economy. And so I would say that's it. In a couple of hours we'll get some more consumer sentiment, consumer confidence figures from the US. It's the Bloomberg Consumer Confidence Index, and that will likely show further improvement in confidence among the US consumers, which again should be supportive of the economy. But just as a final wrap up, I would like to highlight that we have seen this momentum in the stock market signaling complacent markets that are discounting better future and better economic conditions going ahead, and also corporate profits to rise. But I would like to emphasize that, and all of this was on the back of the fiscal cliff deal that came through just after New Year. But we're looking now at debt ceiling discussions. The Treasury is already running on emergency mechanisms, and now we have to settle these debt ceiling has to be raised again. So these discussions could put some uncertainty into the market, and we think that could be a driver. So we might be at the top now at the stock markets, but we'll get further notice of that in the next couple of days. And now as we're wrapping up, you can see the euro dollar has just continued. It's just taken out some further stops, so it's trading now at the highest level in 5 trading days.